Okay, so we're around midway through the US session on Thursday, the 31st of October. Tonight, after the bell, we have Apple, Amazon and Intel reporting their earnings. So I thought we would take a look at each of those. Now, obviously, markets have dropped quite sharply this morning, but they're well above support levels in terms of expecting anything deeper. I would watch 5,700 as the next key level in the SPX itself. The SPX is trading currently at 57.31. So this is the weekly chart of Apple. Just a quick review of the Elliott wave count. I think we've had a cycle degree wave 1 and then a 1, 2, 3, 4, 5 into the high here in 2012. I think that was the cycle degree wave 3, 4 back. And from there, ABC1, 2, ABC3, 4, ABC5. And so we're not far off the targets that we've had between 274 and 284 for the much larger degree move. And that's of some concern in that potentially that is a full 5-wave move at cycle degree from inception in Apple. And therefore, one would be looking at a retrace from wherever this peaks to against the all-time low. That's going to be a fairly huge move and likely to take quite some time. But I don't think we're quite there. Now, if I just zoom this out so we can focus more on the current price action. And, you know, this again, like a lot of things, if this is a fifth wave, at a fairly major degree, and there's a lot of signs that it is. You know, firstly, it's a diagonal, and fifth waves are often diagonals. Next up, it's climbing the classic wall of worry, which is a characteristic to look out for generally in fifth waves. And finally, you know, it's really bloody awkward and overlapping, which again, not untypical of fifth waves. The only other thing I can think of here is off this B wave, you could count that as a 1, 2, and this would be an A of 3. And therefore, on a large degree, the pivot in Apple is at 162. While we're above that, then, you know, bear in mind, we're looking for potentially later a cycle degree wave 2 back. You can't definitively say we're in that until we take at least that level out. Now, if we look at the move up off that level, on a weekly basis, it's been on hugely diverged momentum. We had a CRSI sell signal at this high here, and we've not had any reciprocal buy signal. You can see the new trender indicator on a weekly basis is suggesting that the trend is down short term within a major trend that's still on the upside here. If I add the cycles in on Apple, it looks like it's still got a bit further to go into back end of this year, early next year. So if we get a pullback on earnings, that's all very well. But I don't think we're at the top yet in Apple overall. Now, if we bring it down to the daily time frame and look at the cycles, it's suggesting we get this pullback here and then up one more time into next year. So that would suggest, if that's correct, that maybe I've got this wrong somewhere in here, and that we're going to come deeper either against this rise here or potentially against all of this rise. We're going to get a somewhat deeper pullback. So in order to open the door to that, the first support level on a daily basis is at 214.25. Take that out, and then the next pivot is down at 196. So 214.25, 196 are the two major levels below us. Above us, obviously, is the all-time high at 238. And if we were to take that out, it opens the door to 253 in Apple. Now, again, if we look at the technicals, we've got diverged momentum on the squeeze indicator. It's been on a CRSI sell since here. And that CRSI is flatlining, very similar to that which we've seen in the indices. We've had this protracted period of sideways chop in Apple, which makes it very, very difficult to discern any kind of wave count. But if we look at the short-term trend, it's down, and the major trend on a daily basis is starting to turn lower, and it's also on a Mansfield sell, with cycles suggesting that we're going to move down for a little longer. If I look at the relative rotation, so Apple is part of XLK, and if we look at that compared to others, you can see Apple here, it's coming out of the leading sector, but it's not exactly been maintaining in there, and it's in the weakening, but it's near the center point. So again, that's not particularly encouraging for further immediate upside in Apple, and I therefore would suggest that it's more likely tonight that we see a move down in Apple rather than anything else. Okay, if we then come over and look at Amazon, and again on a weekly basis. So if I go back to the all-time low back here, I've got a 1-2 at cycle degree, and I think we are still in the cycle degree wave 3 here in Amazon, with a little higher still to go before we then get a 4 back, and that 4 back should take us back towards the 66. It could even come as low as $23 in Amazon, and still maintain the pattern where we've got a run up in the cycle degree 5th wave overall. Now, if I just zoom out so we can see the price action a bit more clearly, if that was the primary degree wave 3 with the wave 4 here into the 2023 low, you can see quite clearly this is an ABC here, pullback. Question is that all of the 3? And we're going to get an A, B, C, 4, then a 5th up. The alternative here is, if you look at these fibs, if I just pull these over, we would expect a 3 in a diagonal to come to the 1.0 extension, or the 123.6 fib. I'm wondering whether that's the A wave of the wave 3, and we're going to get an A, B, C back, and then a C up to the 250 area, then a 4, then a 5. The ultimate target for Amazon is up at 359, but I don't think we're going straight there. I think we've either got a 4 back that's already underway, or more complex, a B of 3 back, another high, then the 4-5 to take us there. Again, if we look at the technicals, the CRSI gave a sell signal here, a little buy signal that gave us this run up, and now it's in no man's land. We've got almost no momentum here on a weekly basis, but the short-term and major trends on a weekly basis are up, but that contrasts the Mansfield. All of that to say we've got very, very mixed signals here in Amazon. If I look at the weekly chart, guess what? Weekly cycles, that's suggesting this. And that would suggest to me that we may well see that B, C, 4, 5, and then down after that in Amazon. So it's as clear as mud is about my conclusion on Amazon on the weekly time frame. Now let's go to the daily. I'm going to start with the cycles. And again, the composite cycle is saying we've got higher. The longer term 196-day cycle is saying we've got higher into early 2025. But this shorter term 94-day cycle is topped and is pointing down. That would suggest that we've got more of a pullback, whether it's a B wave of the 3 or whether it's the 4. And ironically, the fibs for a 4 or a B wave are identical because they're against the same fractal, which is this run up off the wave 2 in the diagonal. So I'd watch these fibs here on the daily chart for the likely support area. And if I just then tidy this up and we go down to a 2-hour chart, you can see that we've had this ABC down into this leg, this move up, which came to an 887 retrace. You can see the immediate support and resistance levels on the 2-hour chart here in Amazon, starting just below us at 184. A more important one is at 180. take out 180, and I think that does open the door then to the deeper retrace. Next level down would be 169, and so on and so forth. But you've got those on the in TradingVision on the charts, and then the resistance is just above us at 200 basically in Amazon. A move above 201.50 does open the door to a spike up to 216.77, then the fall back. But bear in mind what the cycles are suggesting is we're more likely to see a move down here in the short term before we go any higher. Now, Intel's interesting. Given the stance of the markets generally and the semiconductor and technology sector in particular, Intel has been moving down. And you know, you've only got to go on social media or any trade press type news to understand why with this company. What I think with Intel is that we've had a cycle degree wave 1 up, and that we are still in an ongoing cycle degree wave 2 pullback, and we've had an A, B, C, and then this is a WXY for the next leg of this wave 2. It's going to have to break the support zone down here at 1468 to open the door to this next leg lower, but I don't think we're going there straight away. I think we've got more of a correction to the upside to come, and it's likely just corrective against this leg down here. How we get down to these levels, you know, I've got an ABC to here, and therefore I'm suggesting that this second leg's a WXY. It could just as easily be an AB, then that's an ABC 1, 2, and we come down in a diagonal structure to one of these lower fib levels over time. But the retrace fibs remain the same either way. So I would look for a move back up to at least 31, possibly as high as 36 over time in Intel from here. If you look at the CRSI, we had a buy signal that gave that retrace move, and you can see that here. We're down here, we've not turned back up, but we look like we might be able to get or about to get a diverged CRSI buy signal on a weekly time frame. If I add the the cycles in, this is suggesting this is going to be, you know, fairly range bound for a bit longer, but then we get a move up here before we see the next major move to the downside in Intel.
Something went wrong. Please try again.
Do excuse me, that's Siri doing something crazy. Before we get the next major move down. So I think this wave 2 has got quite considerably longer to go. And you know, bear in mind, it's a wave 2 at cycle degree of trend. One would expect that in Intel. Now, if I bring it down to a daily time frame, and you can see that this ABC structure came down to the 1.0 extension to the penny. We got the buy signals for this move up. We've had the reciprocal sell. This is trying to give a diverged buy signal right here in Intel. So if I just flip that to its cycles, cycles suggest that the next move up is not going to start till late November, and then push up into around early to mid-January. So I wouldn't expect too much of Intel here on earnings. If it can hold the 1846, it then keeps that door open for a larger move up to at least this 3065 area, which is also where we've got the broken support level, and possibly as high as 3582. But I don't think it's going to be straightforward getting there. I think it's going to take its sweet sorry time over it. I do think it's corrective, and we're more likely to see another leg down in Intel over a fairly long period of time before we then finally get into a wave 3. But again, that's all very, very long-term stuff. If I look at it on the relative rotation basis, so Intel is, let's come down here to the technology and semiconductors. Where's Intel? There's Intel. So you can see Intel here. It's in the lagging sector, but in its favor, it's now pointing straight up towards improving. So it's heading in the right direction. If it was in the improving, heading towards the leading segment, then I'd have more confidence in a move up sooner rather than later. But at the moment, it's suggesting that it's okay, we're not going to see it collapse, all those sort of things, but that it's not one to own just yet. You'd want to see it improving first. I'd want to see the cycles suggesting in the shorter term that we're ready for the next move to the upside in Intel. So not anything of great interest in any of these at this particular point in terms of taking any positions. Let's see what we get tonight and where that leaves us tomorrow with each of these. Just as a tidy up, Microsoft, which we covered yesterday, gap down this morning after earnings, but it's right on support now. So it's held within the parameters we had, but I'm looking potentially lower in Microsoft over time if we can break the support down at 387. And Meta, Meta, again, it's given us a move down today, indicating we may well be in this wave 4 back in Meta with a target down at 457 before we get another leg higher.